Welcome to the Remarkable Retail Podcast, Season 7, Episode 6. I'm Michael LeBlanc.
And I'm Steve Dennis.
In this episode, we're introducing a new segment for our solo podcasts, Ways to be Remarkable. In our first segment, Editing to Amplify. What's this all about, Steve?
Some of our listeners may remember that earlier this year, we had an episode featuring the president of anthropology, and she talked about editing to amplify as a merchandising philosophy that she uses to guide their strategy. And I was reminded that this is a Nike philosophy, actually, or at least as far as I could tell, was first pioneered at Nike by their CEO, Mark Parker. And it's really this idea of doing less better, of really showcasing those things that are outstanding and getting rid of the clutter. And I think this is becoming more important in many ways as we move forward. So we'll talk about that a bit more in a few minutes.
Oh, excellent. And speaking of we did that interview in Vegas. Now, as folks are listening to this, we are back again in Vegas, this time in the Vantage Podcast studio at Grocery Shop. And after Vegas, you're off to Edmonton, I think, to drop some wisdom on the Canadian Tire Dealer Convention. Now, speaking of Canadian Tire, interview with Greg Hicks, very popular episode. I was thinking maybe we should just interview CEOs from Canadian retailers, eh?
Well, I mean, there are a few, so including a couple that we've asked that haven't said yes yet. Looking at you, Calvin, who lives in Vancouver.
Let's get into the news. Quite a lot of macro news in and around what's happening. Lots of movement. So why don't you take it from the top? What's going on?
So yeah, we had stepped away from talking about macro stuff for a bit, but last week we had quite a lot of news around inflation, what's going on with interest rates, and a bit about retail sales, at least in the U.S. I guess just to kind of keep it top line, inflation remains pretty persistent. The U.S., it continues to kind of flatline about twice of where the Fed would like to see it. Still remains pretty sticky throughout the Eurozone. And with the Fed deciding what to do on interest rates this week, this is, of course, a pretty important backdrop. The ECB raised interest rates last week. Some people speculating the Fed might be done. So we'll see where that happens. When you look at what's going on, the job market remains robust. I don't think we've seen the full effect of higher interest rates in terms of what that's going to do to consumer spending. We've seen fuel costs tick up a bit. So it's a kind of confusing environment. But I guess what I'd say about it overall is that it doesn't look like inflation is going to come down quite as quickly as people were hoping. And so what that really means for interest rates going forward and just kind of overall economic growth is pretty questionable. We're already seeing what looks to be pretty close to a recession in the UK, Germany, some other European countries as well. So lots to still come from that. And I guess the other thing I'll just mention quickly, which I don't know, what this really suggests one way or another about inflation or interest rates, is that we got our favorite report here every month. The U.S. Census Bureau releases its monthly retail sales. And the picture continues to be pretty similar to what we've discussed for, I don't know, probably like 6 straight months now. Picture of pretty anemic growth. Overall, retail was up just over 3% year over year, which is, not on pace with inflation. Health and personal care continues to be the category that, for reasons I don't still completely understand, really continues to be on fire. Clothing, general merchandise, for the most part, grocery, pretty much in line with the overall average, though department stores continue to struggle. And as, again, has been the picture for many, many months now, all things big ticket and home are, pretty much the laggards with negative year-over-year sales. So, on the one hand, you got a picture of the consumer slowing down, which suggests that we won't see an increase in interest rates, but inflation remaining persistently high, which suggests that perhaps more is on the table. But the other thing and this is a data point of one, but a friend of mine was just mentioning to me the other day that he had his monthly payments on his home equity loan spike up several $100s a month. He had signed up for a variable rate loan a while back, when interest
like
rates
a great
were quite
idea.
low.
Yeah.
At the time he signed up, he was aware that the rates could go up, but it never really occurred to him that they could spike so much. And he had frankly forgotten exactly when the date change happened. And then all of a sudden he sees this big hit. Now, I don't think this is, going to cause him to sell his house or anything, but you just think about, there aren't as many variable rate things as there used to be. But every month there's going to be some number of loans that need to get refinanced, or these variable rate products that suddenly kick up, and in some cases it can be quite significant. So I think this is kind of a slow moving thing. That's why I say I think the full effect of rising interest rates, they don't get felt super quickly. They get felt over time. So I think that's quite a headwind as well.
Well, I agree. And what I heard was even if your rate isn't going up today on your mortgage, it's starting to dawn on you that it might. And then you start to shift your spending patterns. Like even if you're, it's not going to go up for 6 months, you're like, geez, in 6 months, I got to find another, $400 or $500. I better start thinking about that now. So it puts a dent in consumer confidence, I think. I guess that's the point, right? Slow the roll of the economy, I guess. I don't know. I wish we could say some kind of magic incantation and it would all just straighten out like Beetlejuice. Why don't we all just say Beetlejuice together? I don't know why that came into my mind.
I don't know.
I'm not sure why.
I can't imagine.
It's just on my mind.
Beetlejuice in a while. Yeah.
I know, but it's just on my mind this week for some reason. I can't figure it out. All right. Big week for IPOs. Wall Street's got the fever, and only prescription for that.
It's more cowbell. Thank you, Bruce.
What's going on with IPO?
Well, we talked about this a couple of weeks ago, but now things are starting to happen. So Instacart will likely have IPO'd by the time most people listen to this episode. I think they're scheduled to go out today as this episode airs. Could change by a day or two. They are seeking about a $10 billion valuation, which on the one hand is higher than when they originally filed in terms of what they were talking about, but it is down to their prior private valuations. And a similar situation is Klaviyo, which folks may know is a big automated email provider, that kind of stuff, CRM. I think they're likely to go out later this week. They're seeking about an $8.5 billion valuation, not too shabby for the founders and others there. That's also down from some of their private fundraising, but still pretty nice. And then Birkenstock, which inexplicably is valued. Don't quite understand the appeal of Birkenstock. Effect. Yes, I guess the Barbie effect. They have filed and are teeing up as well. I'm not sure they're going to get out this week, but probably within a week or so.
Well, let's take a visit to the Wobbly Unicorn Corner. Let's talk about one of the OGs. 22. What did they launch? They launched in 2009. Rent. I can never say that right. Rent the Runway. Let's talk about them for a bit.
Yeah, we haven't been to the Wobbly Unicorn Corner in a little while, and I honestly don't like coming here that much. Not that I don't.
It's
love
not
unicorns.
A fun place to visit, really.
It's not so fun, and trying to be a bit more positive, but Rent the Runway, like a lot of these disruptor brands that we've talked about many times, has continued to struggle. Things continue to get uglier there, unfortunately. They just reported another quote-unquote challenging quarter. The good news is they made some progress on sales, margin, and active subscribers. They do seem, kind of, again, continuing with the theme we're about to talk about, to be a bit more focused on those customers where they may have an opportunity to be more profitable. I'm always amazed by some of these businesses that were, so hyped for so many years that after all this investment, they're still pretty small businesses, about $300 million a year, which is the size of 2 or 3 Neiman Marcus stores, which is Neiman Marcus is not exactly a mass brand. And they've got pretty concerning negative cash flow. So the stock, which has been down like 95% since it IPO'd, took a big hit this past week. The market cap is now around $60 million. So you think about, a company like Klaviyo at $8.5 billion. Rent the Runway, $60 million. So I suspect that something big here is going to happen in the next, 3-6 months. Either they get acquired, have to file, they're going to probably need to seek, it's hard to imagine that they don't need to seek additional capital.
Mm-hmm. Yeah. On the positive side, MyTheresa, and remind listeners that we had great opportunity to interview Michael Klieger from MyTheresa. I didn't even know I wasn't aware of this brand. You brought them to my attention. I think you had some intersections with them in past lives. Great. They're turning out good numbers. What, talk about the numbers, then talk about what's different about them that they're doing so well.
Well, when you say we interviewed him, I managed to be a no-show due to technical errors for the interview. Yes. And apparently we need to say MyTheresa, not Teresa, like a bunch of North American hicks. But anyway, no, they, as you know, often we talk about the struggles in making money as essentially a pure play brand, but they are definitely one of the positive exceptions here. That strong GMV and customer growth. Folks who listen to the interview, I would encourage them to go back to listen to it. If they haven't, might remember that Michael talked a lot about how they were trying to expand outside of their German and then European roots into the U.S. They've reported great progress in the U.S. The really only negative there was that they did allude to what we've been hearing in the last few months, is that while the very high end of luxury is generally in pretty good shape, the more aspirational part is fairly slow. There's more pressures on margin, both from the cost side as well as ability to raise prices. And so the stock has been caught up in a bit of a downdraft, I think, of most of the online players, but it was up pretty nicely on the news. So good momentum there, even though they kind of called out some headwinds.
Let's wrap up with a couple of quick things in the world of DTC. More taking the D out of DTC. Kendra Scott strikes a deal with Target, and it's a big deal with lots of items. So talk about your thoughts, and maybe for those who don't know what Kendra Scott is, give us a bit of an overview.
Yeah, well, speaking of aspirational luxury, Kendra Scott is an aspirational luxury brand that started just down the road. I mean, about 200 miles down the road from where I am in Austin. They have really, well, I wouldn't say they've exploded on the scene, but they went from basically nothing to becoming a pretty powerful brand in about a decade. They are, I think they've got over 100 of their own stores. And I actually had to look to see how many they had in the Dallas-Fort Worth area. The answer is 7, which is quite a lot. And of course, a strong online business. They've been selling, they were selling to us at Neiman Marcus when I was there. They've also been selling through Saks Fifth Avenue and Nordstrom for quite some time. So they're pretty well established at this point, but primarily in this aspirational luxury segment and through their own stores. So they just announced a deal with Target where they're going to have an exclusive collection with something like 200 pieces, most of which will be under $40. So that's quite a bit below their typical price points. So that'll be available everywhere online and very also accessible in about 150 stores. And they're also going to do, and there's some renderings online if people want to check them out, but they're also going to do 3 quote-unquote flagship locations, which will be more like a shop within a shop in Edina, Minnesota, which is not too far from the headquarters of Target, in Katy, Texas, which is a suburb of Houston, which I understand is, or I'm guessing, I shouldn't say understand, I'm guessing is probably Kendra Scott's strongest market. And then also in Austin, not too far from their headquarters. So I think these are, places to kind of see. So I think it's interesting for a couple of reasons. One is, we do continue to see these kind of semi-exclusive partnerships with brands like Target that are looking to get some sort of unique advantage over their competition, and then from the brands themselves looking to get more access and more growth. And Kendra Scott's probably pretty tapped out within the wholesale partnerships they have today. I also wonder whether it speaks to, and we keep coming back to this, but the department store sector, at least the traditional kind of department store sector, even on the high end, continues to be under so much pressure. And you just kind of wonder if Kendra Scott looks at that and says, I'm pretty exposed here in terms of my wholesale volume. Doesn't look like there's a lot of upside. Maybe it's time to diversify a little bit. So, the challenge will be whether they can maintain the kind of exclusivity feel, the higher premium price points that they get selling through places like Neiman's and Saks, while being in a more mass market player like Target. So super, super interesting. They're really a brand, I think, that doesn't get quite enough attention.
I wanted to make a note. We lost a visionary, someone who I met and interviewed, like Alexandra Waldman, who actually turned out to be a Canadian. We didn't know that until we got on the mic together, and she said university, but she passed away. A real icon of the size inclusivity movement with her universal standards. So we lost her sadly last week. So I wanted to give a shout out to a great merchant and a visionary. So Alexandra Waldman. As we said off the top of the show, we're trying a new concept, a new segment, so to speak, for our solo episodes, organized around different ways to be remarkable. Now, we talked about what we're going to be talking about, the editing to amplify. But what prompted this in your mind, the general idea that we would, talk about ways to be remarkable? What were you thinking when you pitched this?
Some listeners may be surprised.
What were you?
Well, I was crazy from the heat, crazy from the fever.
More cowbell.
Some
you need more
listeners
cowbell.
may be surprised. More cowbell, yeah, exactly.
There you go.
Some listeners may be surprised to learn that I do occasionally take feedback. And some of the input I've gotten has been around both that sometimes I'm too quick to point out what people are doing wrong, but don't spend enough time pointing out what people are doing right. I think that's a fair criticism. So some of it is to respond to that. Some of it is to just, I guess, provide what hopefully is good guidance around ways to respond to shifting conditions in the market. And to a certain degree, I guess it's an update or a way to go deeper on some of the advice that's in my book or that I speak about. Obviously, not everybody gets an opportunity to see me speak or work with me directly. The book, I'm finished almost 4 years ago, really, at this point. So lots has obviously changed. So we're kind of spooling out some of the things that are contained within. I'm sure that some of the material that's in my new book is kind of going to be infused into what we talk about. So that's the general idea.
Now, before we kind of dive into this idea of editing to amplify, it might not be a bad idea to stop and just talk about what you mean, because we kind of assume everyone knows what we mean when we say remarkable. Talk about that for just a few minutes, because I think, as you say, your book's been out for a while. We talk about it, but let's not assume everybody understands the conceptual framework behind it.
Yeah, I'll be brief about this because I imagine there are quite a few that know exactly what we're talking about here, but we've obviously gained a lot of listeners in the last year. Not everybody will have read the book, but the basic idea is really that in a world where there's so much competition, so much choice, constantly shifting dynamics, consumer preferences, etc., that even very good isn't good enough anymore. That you won't even get noticed if you're merely better than average or very good, and or you end up competing pretty much solely on price. So you have to be able to amplify what you do by being intensely relevant, truly unique, making those deep kind of emotional connections. And from the standpoint of why I call it remarkable retail, it's really literally that customers will talk about it, they will remark upon it. So people that are familiar with Seth Godin's work in Purple Cow, it's a very similar kind of idea. And so, brand stories that spread tend to win. It's one of the reasons why things like Net Promoter Score tend to be very good indicators of long-term value of brands. So yeah, when we talk about remarkable, it's really a very clear cut above the competition, very powerful with the consumers, and that ideally customers will literally talk about.
All right. Well, let's get into the notion of editing to amplify. So it resonated with me right as soon as I heard it. But let's unpack it. I think you said it was popularized by Mark Parker at Nike. But take us through. I guess it's a philosophy. Around merchandising. Talk about it a little bit more.
Yeah, I don't know a ton about the history other than it was something that Mark Parker really talked about going back, I think, a good 15 years ago. So I remember reading about it along the way a little bit. I have worked with Nike as a client in the past. So I heard about it when I was there. But it's really at one level, and there's more nuances to it, which we'll get into a bit in a minute, but it's kind of a less is more philosophy. Some folks might be aware of this idea of the paradox of choice. Studies that have done that the more choices you give people, sometimes actually confuses them.
Less satisfaction, right?
Them.
Less, yeah.
Right. Yeah, so I think there's some things that we probably know. Like if you think about what makes good specialty retail, this or even what makes good tactical merchandising, at some levels, we trust as a consumer, hopefully, that the retailer has figured out what's the right product to bring. So whether that's done within a larger retailer where the assortment has been curated, for what they think is best in the market, or gives you a selection of good, better, best choices, those kinds of things. Like this is pretty central to retail for a long time. And lots of specialty retailers have really thrived on narrowing their customer focus and therefore narrowing the choices that they bring to the market compared to the market at large. So this idea of doing fewer things better, or curating what you do to provide a more powerful connection, better options, etc., is pretty important. The way I've started to think about it over the last few years is that one way of thinking about it is that you are improving your aim. You look at the world of customers and you look at the world of competitors you could compete with, and you're deliberately narrowing your aim in order to create that more meaningful connection. Now, like I said, doing this conceptually is not new to retail. And there's lots of examples going back to the success of certain mail order catalogs and lots of specialty retailers over the years. Sure. Why I think it's more important now, or has become more important over a period of time, is, today the customer has this infinite world of choice. Yeah. They can buy just about anything they want, anytime they want. And so your competition is no longer the guy across the street or over at the mall or, however far you're willing to drive. So unless you have, unless you're Walmart or Amazon or some of these players that are just sort of like suck in the demand from the universe, for you to get even noticed in the first place, much less win the sale based on anything other than price, is just increasingly difficult. So I like just call back Seth Godin again. One of the things Seth has talked about over the years is that, so much of retail and many brands has been about selling average stuff to average people, focusing on the peak of the bell curve. And, there was a period of what I'll call massification in retail, going back to like the 70s and 80s, where bigger was better, the era of Walmart and Target, but also all the category killers, Bed Bath & Beyond, Home Depot, et cetera, where, you're really going for kind of the largest possible audience for whatever sector you happen to focus on. But the category killers focused on very large sectors, right? There wasn't anything particularly personalized or unique about what they were doing. And, today I just think, not that it's impossible, I'm never going to say there will never be another $100 billion plus retailer again. But when you think about what it would take for somebody to start that business, or take a $100 million business to that level, you're basically going to find yourself going against really huge guys with incredible scale and scope, and largely competing on price. And again, as Seth says, the problem with the race to the bottom is you might win.
Or come in second, as is often the other
Exactly.
part of that problem. No,
you've been paying attention.
You've been paying attention. Yes, Sensei. So when we think about this, I always think of like the home. I was in the tool business, right? So I think of like a Home Depot or a Lowe's, where you get every single kind of drill you could ever imagine, because that's a value proposition as well, right? For some, that they would say, you come to us because we give you more choice, and I guess it's that balance, right? So that what you're saying, I think, is that's going to work less and less, and that editing that assortment, I guess like a Costco does that, right? Or a Sam's, where you go like we carry a rice maker, but it's only one, and this is the one we think.
Well, I think also the question is, I guess we'll only sort of know this in hindsight, but I think you could look back even and say, Well, if you look at the last, say, 10 to 15 years, what retail businesses have grown that have thrived on the peak of the bell curve sort of model, as opposed to the more focused model? And what retailers have struggled that were built on the little bit of everything for everybody, not much of anything for anybody sort of model? And we've seen lots of examples, what I call the collapse in the unremarkable middle. But Bed Bath & Beyond and Toys R Us and Pier 1 and Radio Shack that really were built for a different era, they didn't evolve, and they're in trouble. And when you look at the businesses that are more successful in the last few years, they've largely narrowed their aim. So Tractor Supply is a great example of that. Ulta is a great example of that. I mean, they're large businesses, and to a certain degree, I'm talking about it's okay to be considerably smaller. And I think going forward, we'll find it harder and harder for businesses to get even as big as Ulta and Tractor Supply. They resisted the temptation. Tractor Supply is a perfect example. Folks should go back and listen to our interview with Hal, where I believe he said this on air. I know we've talked about it. So think of the temptation to make those Tractor Supply stores bigger.
Yeah,
they're not very big stores.
Yeah.
Right? It would be really easy. So can't we add another 5,000 square feet? We don't carry that much pet stuff, right? We don't carry that much workwear. We don't carry, there's so many categories.
The discussions around the table. It's like, hey, we got all these new customers. There's a good article in the Wall Street Journal last week talked about this. It's, hey, a lot of people found Tractor Supply. Maybe we should bring in more assortment to cater to them too. It's very tempting, right?
Absolutely. And I'm not saying they should absolutely not do it, but the discipline of saying, who is our brand for? What is our brand for? And what are those things where we really have an opportunity to powerfully connect with them, earn those NPS scores, earn higher margins? And the more that you allow drift to happen into other, customer types, other product categories, the more potential vulnerability. So, I think there is plenty of evidence that the days of the super mass merchants are pretty much over. And I think it's also pretty obvious that those of those brands that sort of stuck with their old format, and I'll just use Macy's because it's my favorite whipping post, but it's a good example, how Lawton used to work at Macy's. The worst thing about being a merchant at Macy's, I'm sure, is how big those stores are, because
got to fill them up.
The space is free, right? Got to fill them up. If they're not, I guess they've sort of forced them to do this exercise with the Market by Macy's. But as we've talked about, that's, I think, too little, too late. But I think, it's really this question, and one way I've been thinking about it is, and it's something I talked a little bit about in Remarkable Retail, but I've been thinking about it more recently is, think about target customer segments in more of a bullseye. Who's at the center of that bullseye? If you had to say who are going to be your absolute very best customers, that you're building your brand for, that are really, really going to love what you do. And Remarkable Retail, I talk about it as the obsessive core. I don't know that I love the word obsessive so much anymore. Maybe it's that passionate core. But if you think very carefully about who that is and drive most of what you do for them, then the hope is that those customers bring that next ring of customers who probably, aren't going to be as high spending or as high margin or whatever, but it'll still be very lucrative. What does that look like? If you were to try to articulate that for a Kohl's or a JCPenney or Macy's, it would be very hard to do, It's not hard to do at a Warby Parker or at RH or, a number of other brands that have had a lot of success. I think even, brands that are fairly mass market, like, Trader Joe's, they have a much more tight definition. It's almost like, I know sort of Trader Joe's people, or I know, that the brand itself speaks to the type of person they are and what they value. Yeah. And I think that kind of thought process has been important and a key to successful brands over the years. So this is not at all an entirely new idea. what I think is missed sometimes is how much you could get away with being a little bit of everything 20 years ago. The pressures for you to be as good, to be remarkable, weren't there. And my argument is that, I might make this argument remarkable retail, but I absolutely have become more persuaded by it over the last few years, is that you've got to figure out how to get that more narrow customer focus and go deeper. And so force yourself to edit what you do to amplify its impact. Now that could be within your stores, in terms of what you offer. It could be what you do with your store format, in total, or your distribution strategy. So, Mark Parker at Nike talks about it more within the assortment strategy, which is, and Anu, when we spoke with her from Anthropology, she talked about it more within the assortment strategy in particular. But, they already start, particularly Anthropology, they have a very clear view of what that brand is about and what's in and what's out. So if you're a brand, it's really about picking a lane in a lot of cases, right? Because you're not going to out Amazon, out Walmart, out Costco. So unless somehow or other you've figured out a way to overcome those obstacles, spoiler alert, you're not going to, you've got to go in a very different direction. And it's getting stuck in the middle that's really the death sentence.
Let's talk about within the ecosystem of retail, and there's an article about this recently you commented on social media about very specific small malls formats that are dealing with very niche, not even niche, but particular communities. So I guess this doesn't just apply to retailers, but also to where people gather in general to shop. Right? This idea that a small, more focused shopping mall can do really well.
Well, sure. Well, if all you offer, whether it's an individual store or a shopping center, is a bunch of stuff for the average person, sometimes we need that, but it tends to become more price or convenience dominated. What's the reason to make a special trip, though? That's the question. I've been saying for years that I wasn't. I think I wrote a blog post called, "It's the end of the mall. It's the end of the mall as we know it, and I feel fine," and that was because I'm not an investor in malls, but so maybe.
But an REM fan, apparently.
What we know about malls, and I think was pretty obvious, was that the very best malls were going to be fine. In fact, they might thrive. It's the average ones that are going to be in trouble, and this has been playing out. So the specific article you mentioned speaks to shopping centers that cater to an Asian clientele, and this is a great example of saying, well, we're not trying to be a shopping center for everybody. We're trying to be a shopping center that understands a particular type of customer and curates what they offer for that customer. Just say in the same way that Eataly, if people are familiar with that, I know that you are, says, well, we're not trying to be a grocery store or a place to go dining for, Chinese food or, whatever kind of food you happen to like. We're about people that are really into all things Italian. So, whether you have a shopping center that caters to Asian clientele or people that really love Asian culture, or a store that's all about the Italophiles, I guess would be the word, or a very high-end shopping center. Here in Dallas, we have this shopping center called Highland Park Village. It's one of the most, it's open-air center. It's only about 60 shops. It's one of the most productive shopping centers on the planet. It is very clear who that center is for and who it is not. It is only the best in luxury. There's a high-end Soho Club type place in there now, a bunch of, restaurants, but, it's for the Hermes customer. It's not, there wouldn't even be, a Coach or a Kate Spade store in there, So it's about, like, to the point you made, it's also about what it, you can argue about, whether you like that or not, right? But that discipline, knowing what to say yes to, knowing what to say no to. But when you go there, like in a second, like if you've never been there before, you're like, okay, I get this, right? And it's either fantastic,
and it's either your kind of place or it's not, right?
Exactly.
Yeah.
And there's something like we don't need to worry about that if we work at Walmart, right? Or we're a Walmart shopper, because we know the Walmart value proposition is about value and great assortment. So that's fine.
Yeah. Yeah.
But, I would argue, and this is going to sound like a weird thing to say, JCPenney needs to learn more from places like Highland Park Village than they do from Walmart, because they're never going to beat Walmart. Right. And I'm not suggesting they should go super high end either. But if people can't walk into a JCPenney or a Kohl's or any of these places that are struggling and understand what makes you special. And you're not, I would say, do this exercise around the passionate core customer. Because if you can't identify who's at the center of that bullseye and why they shop with you and why they're willing to go there even when you don't have a sale, and what it is that actually drives their repeat and drives their willingness to recommend you to friends and customers and those kinds of things. If you don't have that strong core, you get into this trap that most of the department stores have, but other retailers as well, of trying to seduce the promiscuous shopper, right? It's placed the customer or that is like, well, you're an acceptable choice, but I really only shop with you when you give me a good deal. And there's no way to make that a profitable business.
Well, let's turn our minds now for the listener who, let's say, she's listening and she's saying, "Well, okay, how do I make this happen in my business, even in my world?" Like, what's your advice about where you start and how you start thinking about it? So once we acknowledge or get the concept, how do you turn your minds to actually making it happen? What's your advice?
Well, the highest level I would go through and say, where might there be, not necessarily have to be, but where might there be opportunities to narrow your focus and improve your options, kind of, boost your signal to stand out with the customers you want to keep and seek to grow and retain. So that could be within your assortment. It could be within your marketing. It could be within your store design or maybe a totally new store format that needs to be done. It could be in your go-to-market strategy. We've talked about this before on the podcast, but, most stores were built for an era that no longer exists. Most go-to-market strategies were about kind of one size fits all, kind of cover the metro area. That may not be the right deployment strategy for the future to really fight and win. So I think there's also something to really looking, one of the things that's behind Mark Parker's Edit to Amplify philosophy is that there's some power in simplicity. And Siegel and Gale marketing agency, do a study on the power of simplicity in branding. And they show that simpler brands, on average, tend to do better than more complicated brands. So an example of this would be, and it's a little bit of a tired example, so I'll give an updated example, but Southwest is, one of the things about Southwest, people talk about like their quirky advertising and their funny flight attendant announcements, but the real power of the Southwest business model is its simplicity. They fly all the same aircraft, which makes it easier to train people and do maintenance on. They have, no first class, no baggage fees. There's a lot in their operating model, which is very simple, which means that customers can find it easy to understand. And for the airline, it's easier to operate. Now, they've not invested in technology enough, and they've had some other issues. So my favorite example, not just because a good friend of mine works there, is Breeze Airways, which is a startup airline, which has taken a lot of what Southwest has made, kind of pioneered in and updated with better technology and better marketing and some other things. But I think I would look at ways to perhaps simplify what you do and ask whether any complexity you're adding in marketing and operations really adds. And then, as I mentioned, I would really think about that customer bullseye, trying to understand who your passionate core is. Then you can kind of go to the next easiest, kind of the group that the passionate core may bring along with them and so on. If you only do 5 rings, I'd say, your 4th ring is what I mentioned earlier, is the promiscuous shoppers. They pay some bills, but they're really not that into you, and therefore probably not driving a lot of profitability. And then to the point you made earlier, that 5th ring is, who's this not for? And don't get distracted by trying to conform or chase a customer that's never going to get what you're doing. And, do that deep digging particularly on the passionate core, or that 2nd ring. Why do they buy? Why do they love you? Mm-hmm. What motivates them to share the story of the brand? What else can you do for them? One of the things, and I think Anu hinted at this as well, when you have a really good understanding of the center of that bullseye and you develop that trust with them, there may be other things you can do for them that they will trust you for, services you could add. We talked about that a little bit in terms of what anthropology is doing. And clearly there have been brands like Apple that have been able to expand outside of computer products, partially because of the trust that they've built by being very, very true to the center of their value, very, very true to the value proposition and why they do what they do and all that kind of stuff. So I think there's a lot there.
Well, you've hit upon a bunch of things. And, as we kind of bring this episode to a close, or the segment in this episode to a close, I mean, you've talked about reoccurring themes about being small, being special. And what I like about it, I was thinking as I'm listening to you got to do the work. And you said that multiple times, right? Ultimately, you got to do the work if you're going to have this ongoing strategy and compete and win, or if you're going to just change trajectories and kind of amplify your business. And you got to do the work. All right. Well, listen, a great discussion, and I think great advice as well for those for the listeners. And listeners, tell us by all means, social media or whatever. Send us either an email that if you like this kind of idea of the segment, and we'll continue to think up more for the future. We're, as I said, we're in Vegas right now doing lots of interviews, so we'll have some great guests coming up. Well, let's leave it there, and we'll talk about more in future episodes. If you like what you heard, please follow us on Apple, Spotify, or your favorite podcast platform so you can catch up with all our great episodes, including our recent interview with Carrie Baker, President, Canada Goose. And be sure to drop us that 5-star review where you listen to your podcast. It really helps us spread the word.
And I'm Steve Dennis, strategy and innovation consultant, keynote speaker, and author of the best-selling book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption. You can learn more about me at stephenpdennis.com, and be sure to follow me on LinkedIn, Twitter, and Instagram.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, and producer and host of a series of retail trade podcasts, including this one. You can learn more about me on LinkedIn. Safe travels, everyone.
Babies, before we're done here, y'all be wearing gold-plated diapers.
What does that mean?
Never question Bruce Dickens. Go!